Assalamualaikum and good morning. Today, we've been shocked by accident accounting fraud happened to company run by Bernard L. Madoff Investment Security. As you know, accounting fraud is intentional manipulation of accounting record regarding revenue, sales, expenses, assets, and others to obtain more financial gain or avoiding debt obligation. For short, it happened to make company conditions seem better than it actually is. It's involved employee accounting or organization itself and is being dishonest to investor and shareholder. Term cook the book we can describe here also as an expression of dishonest action performed by firm in order to manipulate their financial statement. Surprising all the world, Fortune 500 company once a year list of the 500 largest company in the United States as collected by Fortune magazine such as Enron and WorldCom were found to have cooked the books to improve their financial performance. The reason are because of personal gains. Let's connect to our friend out there to interview their staff for further information.
Now I will explain on how the fraud was perpetrated and concealed. At the minimum of 40 years, Bernie and Madoff did his fraud with a Ponzi scheme and discussed the scheme with his advertised as an available investment by using his property. Bernard L. Madoff Investment Security LLC BLMIS. Madoff swindled the customer investment, flow the customer cash to personal account owned by him, and send out imaginary record articulation to conceal the trick. When he attracted more investors into his company, he was able to gain more capital, thus use it to subsidize redemption. However, in the late 2008, the market declined sharply and was not able to keep up the fraud. In 2009, at age 71, Madoff confessed to 11 government offenses. He is found guilty of wire fraud, securities fraud, and mail fraud. He also pleaded guilty of the crime money laundering and perjury. Bernie Madoff fraud is not sure precisely when it started. He affirmed in court that the scheme began in 1991. However, the account manager in his firm, Frandy Pascal, said the fraud has been occurring since 1971-75 when he had been working with BLMIS. From the early 1990s, Madoff never actually traded anything and he cooked the books to show his profit. In any case, one of the leading analysts of Pickett named David Sheehan thought the management of assets in Madoff company was a fraud from the start. At the time when customers yearned for their profit, he financed them using new investment, which he got from his firm for rewarding profit. Madoff likewise developed an image of exclusivity, regularly at first dismissing customers. He generally refused to meet instantly with investors, which gave him an aura and developed a temptation of the investment. Some of Madoff's investors were cautious about breaking off their fund from his finance in case they could not gain anything later. This idea enabled consistently 50% his clients to earn their earnings. New shareholder investment is used to pay older shareholders' profit. Madoff put on a facade of decency and goodness, cultivating new shareholders through his altruistic work. The early User Foundation for Peace and the Global Women's Charity Hadassah are few among organizations that were cheated by Madoff and had their investment abolished. He started to contact Chagor by using his connection with J. Ildra Merkin, who is a staff at Manhattan Fifth Avenue Synagogue. Using various accounts, Madoff has swindled at least $1 to $2 billion from his investor. Instead of offering a large profit to all shareholders, Madoff offered small and consistent profit to a group of special audience. He was very covert about his business and cautiously keep his financial statements. The second is I will explain about who is the whistleblower. The whistleblower in this Madoff fraud is Harry M. Markopoulos. He is an American departed security industry administrator and an individualistic forensic bookkeeping and economic fraud analyst. He discovered evidence showing a Ponzi scheme is at work for more than 9 years in Bernard L. Madoff Investment Security LLC. Within 3 years, Markopoulos apprised the U.S. Security and Exchange Commission (SEC) of the crime, providing aiding evidence only to be disregarded by SEC or simply gave his benchmark a fitting or ad lib investigation. In December 2008, Madoff was discovered as a scam when Madoff's son contacted the Federal Bureau of Investigation. Madoff was sentenced in 2009 for a long period in confinement after accepting to engage the most scalable voluminous Ponzi scheme in years. Markopoulos has started the SEC for both fraudulence to uncover the Madoff scam despite regular tips, and for authority to assess properly the larger companies it supervises. After meeting with SS CEO Frank Casey, who is the well-known rampant principal, discovered the supervisor was Bernie Madoff. Bernie Madoff, who was active in investment consultations. His client gave him the freedom to use the funds as he pleased. Markopoulos believed that Madoff was doing his Ponzi scheme can get by when cash is flowing in as payment for the existing shareholders. In any situation, Casey and Selo believed Madoff was front-running and Markopoulos was quick to accept that. However, Madoff still doubt as his family believed leader to do not want new cash. And Madoff was previously a rich man, and logically Madoff does not need still billions of dollars as he already owned as much. Moreover, to complete his fund, Madoff was direct his investment to complete their investment in order to make him as front-running based on what Markopoulos believed.
Today we are outside the court of fraud of Bernard L. Madoff. Okay, today I want to talk about pressure, opportunity, and rationalization. Okay, firstly about pressure. These usually have a financial problem such as gambling addiction, accumulated debt, unexpected expenditure, and maybe just for their greed. Another pressure is performance-based compensation or remuneration plan for top manager, which can make someone to do a fake positive earning or upward share price. There are also non-financial pressures which the company keen to maintain their reputation, gain the reputation to gain more, or any other method of advancing one's personal social standing. The pressure can be based personal status, which can be determined by hunger to achieve or maybe fear of losing it. Unlike the financial initiative, these financial motivations are very hard to detect. Okay, about Madoff, Bernard Madoff is confident to build his Ponzi scheme. Ponzi scheme is a quick return to the first investor from the money invested to the later investor. He did this because he has motivation and felt the pressure. Okay, Bernard Madoff's objective was to maintain his high income lifestyle, to which he had become more greedy. Madoff has a problem maintaining his reputation and the profit of the firm. Madoff had struggled to generate income to cover return for investor that required to repay early investor with the money of the new investor. Okay, secondly, it's about opportunity. Okay, which is taking chances of doing fraud without being detected or caught. It also explains how the people is doing their they will take advantage on the position, power and capability to fulfill her non-shareable needs, if they want to detect fraud, the company has to identify the opportunities. Fraud opportunity will be poor internal control, especially with the segregation of duties, a good internal control which will remove any potential opportunities that may occur. Opportunity could also result from unsuccessful anti-fraud program, collision and management override. For example, junior auditors gave lack of experience and this will given an opportunity for people to make fraud. If the junior auditors are left to do their task without the supervision of the supervisor or of the senior partners, this will be a great opportunity for the client to commit the fraud. Okay, relate with the case about the opportunity. Okay, Madoff took advantage of his position as the head of the company, right? Which gave him a chance to do a crime without anyone knowing. Madoff had enough management power and authority to control the internal control and corporate governance. In any way to control them, firstly, typical segregation of duties, which Madoff found was missing. Normally, an investment manager should have a segregated duties in his duties, right? But he did all of the four function of the as the investment manager of the company. Okay. Secondly, the corporate governance of Bernard Madoff had all been related to Madoff, which his brother as the chief compliance officer, his nephew as the director of administration, his sons as a director, his niece as a general counsel, and thirdly, Madoff insisted using a solo auditor. Madoff hired a Friendly and Horowitz. The firm consists only 3 employees, and the office is so small. Okay, another opportunity that Madoff had, people trust in his reputation because his reputation, he gained his reputation in the 1970s and 1980s, where he set up a competitive advantage and got the influence of Nasdaq, which then he became the chairman of Nasdaq, and the position brought him some respect and trust from the investor. Okay, when people like Madoff had a good reputation, this will make public want to invest in his company because they trust him with him to handle the investment of the company. This made him to take advantage on the victim that invested him, which by using the Ponzi scheme. Okay. Thirdly, last but not least, it's about rationalization. Okay. First, they will start to begin making excuses for the fraudulent act they did. Before committing a crime, the perpetrator always try to find and give reason for his or her act, being that is the defraud is acceptable. They will try to be as they are the victim rather than the fraudster. For example, a fraudster might rationalize his or her action by thinking it is a good cause for them. I will pay, maybe they will think I will pay back later, or everyone is doing it. So fraudulent rationalization is a common thing to the employee where they are unhappy with the company or the treatment of the employees. Rationalization is difficult to detect because it is very hard to solve. Okay, with the relate of the case of Bernard Madoff, rationalization should be taken into account in order to detect Madoff fraud. Madoff rationalized his action by persuading him that he was doing the right thing for himself and his family. That's why he took the advantage on his investor. Mind inside Madoff head is saying that the chances of him doing fraud is a good thing with the rationalization. Okay, firstly, Madoff rationalized that it's the investor's fault that they had trust in him without any doubt what might happen. Secondly, his victims were rich and none of them will take him to custody if the investor have lost their investment. Thirdly, he will say that other people will do the same thing. There would not be any investor if they do not want to earn profit from the market without taking risk of being tricked.
Okay, next we go to consequence, effect, and penalty imposed. Okay, David G. Freeling is an accountant who was captured on March 18, 2009 for his part in the Madoff investment scandal. He was accused of securities fraud, helping and abetting investment counsel fraud, and 4 accusations of recording false audit report with the Securities and Exchange Commission. On November 3, 2009, he conceded to the charge against him. He also uncovered that he kept on auditing Madoff even though he had contributed a big amount of cash with him. Accountants are not permitted to audit broker-dealers with whom they invest. Freeling faced the most extreme sentence of 118 years in jail. However, not at all like Madoff, who has consented to work together with the government. Freeling adequately finished his job as an accountant. The CEC is not permitted to accept audits from indicted criminals. He lost his CPA permit on July 19, 2010. Had he gone to trial, he looked more than 100 years in jail if indicted. Freeling's sentencing was initially set for February 2010, but was delayed a few times at the prosecutor's request because of his participation with the government's effort to unwind Madoff crimes. It was at first rescheduled to September 2010 at the request of the indictment refers to Freeling's continuing cooperation with the government. In March 2012, it was put off to October 29, 2012. In July 2014, it was delayed to December 2014. In late 2014, it was delayed once more. In May 2015, U.S. Region Judge Laura Taylor Swain sentenced Freeling to 1 year in jail and 1 year of supervised discharge. Freeling avoided jail because they collaborate broadly with federal prosecutors and because he had been unconscious of the level of Madoff violations. Tending to the court at the hearing, Freeling apologized to Madoff victims. Swain accepted the plea but proposed that Freeling be compelled to pay some portion of the general 130 million as a whole emerging from the fraud. In December 2008, Bernard Madoff's fake investment firm fallen and collapsed when its owner and founder was captured and had entrapped victims around the globe, which is a huge number of colleges, universities, charities, wealthy people who altogether uncovered investment of more than $20 billion with Bernard L. Madoff Investment Securities and others. This fraud had impacts a long ways past the direct investment that were lost by a huge number of victims. Open trust in his company and the financial system was influenced, especially among individuals who live near Madoff victims. Madoff was sentenced to 150 years in jail and compelled to relinquish $170 billion out of 2009. His 3 homes and yachts were sold by the U.S. Marshal. He resides at the Butner Federal Correctional Institution in North Carolina. Madoff pled guilty in 2009 and got a 150 years jail term. A huge number of investors lost their life. Reserve funds and multiple stories detail the harrowing sense of lost victims persevered. Investor in Bernard L. Madoff Investment Security lost billions of dollars in the Madoff investment scandal, a Ponzi scheme fraud directed by Bernard Madoff. The sum missing from client accounts, more than 2/3 of which were picked up, was nearly $65 million. The court designed trustee evaluate actual loss to investors $18 billion, and some of that cash has now been returned. Such events adversely influence other investors' belief in how our financial system functions. The study found that once the trick was reported, investors who knew Madoff's victim or lived in similar territories lost trust in the financial system and changed their investment behavior. The scandal, the world's biggest ever fraud, will mean the widespread devastation of riches, not just in the United States, but rather globally. It will prompt billions of dollars in compost downs and losses for financial institutions, bankruptcies for weaker and lighter banks, and financial pulverization for retired people, hospitals, colleges, universities, and philanthropic associations whose assets were set with Madoff.
In conclusion, accounting fraud has occurred in a lot of big companies such as Bernard L. Madoff Investment Securities LLC, Enron Corporation, and WorldCom Telecommunications. It is an intentional manipulation of accounting records regarding revenues, sales, expenses, assets, and others to obtain more financial gain or avoid debt obligation. First of all, a public listed company must submit all of their financial statements to external auditors to be audited. External auditors are responsible to do sampling of the financial statements and provide a reasonable assurance about the financial statements. Auditor must be competent in analysing the sample to ensure there are no frauds done in the sample. However, the internal auditors of the company must also be vigilant in analysing their own company financial statements to ensure that there are no frauds being committed. In the case of Bernard L. Madoff Investment Securities LLC, the fraud were found by an independent auditor named Harry M. Markopoulos. He had doubts about the company's transaction and collected evidence to prove his point. His competency and resoluteness in collecting the evidence are exemplary. Other than that, a public listed company should take measures in preventing fraud from happening. One of the measures that can be taken is segregation of work. By segregating the work, frauds are easier to be identified and harder to be conducted because of different employees focusing only on their tasks. If any of the tasks seem to be amiss, the management can take action as fast as lightning in correcting them, thus prevents fraud from happening. Moreover, less experienced employees such as junior auditors need to be under constant and strict surveillance of more experienced and competent auditors. The junior auditors' work needs to be checked and approved by the senior partners. Their proficiency in this field will make it harder to do or hide frauds in the midst of transaction. In a nutshell, public listed companies should always follow the rules and laws set by the government and respective bodies in their countries. These law and regulation are made to lessen the amount of frauds done by companies. Therefore, all companies should work hand in hand to combat frauds. Thank you.